During today's webinar, we will give you up-to-date information on making tax digital for income tax. We'll start with what is making tax digital for income tax, including benefits and opportunities. We will explain who will be affected and when. We will also look at what is changing, the sort of digital records that you'll need to create and keep, and what we mean by quarterly updates. And for that, I'm now going to hand you to Kieran to continue. Good morning, Kieran.
Good morning, Michelle. Later, we'll also look at using Making Tax Digital for income tax compatible software, the new penalties, authorizing agents if you use an agent, including enabling the use of multiple agents, and we'll look at the benefits of early sign-up. First, we're going to go through what is Making Tax Digital for income tax, including the benefits and opportunities. Making tax digital for income tax is the cornerstone of HMRC's commitment to modernising the way small businesses handle their tax and reducing tax loss to error. Making tax digital for income tax will be introduced for self-employed individuals and landlords with income over £50,000 from April 2026. Those with income over £30,000 will be mandated from April 2027. From April 2028, those with income over £20,000 will be mandated to use MTD for income tax. Digitalising our service will bring customers benefits by reducing the risk of unintentional customer errors, saving you time when they come to submit your end-of-year tax return, supporting wider productivity and less time managing paperwork through use of digital tools, and enabling HMRC to better tailor services to customers. Making tax digital for income tax is a generational change to help digitalise UK businesses, which will improve growth and productivity and also reduce error. It's the biggest change in the income tax regime since the introduction of self-assessment in 1996. It is the flagship change in HMRC's transformation strategy and ambition to become one of the most digitally advanced tax administrations in the world, fit for the 21st century. Making tax digital income tax will affect customers who are self-employed, traders or landlords, and is being introduced in phases beginning as a legal requirement for around 780,000 customers from April 2026. From April the 6th, 2026, some sole traders and landlords must use it based on their total annual income from self-employment and property. You or your agent, if you have one, will need to use compatible software to create, store, and correct digital records for your business income and expenses, send your quarterly updates to HMRC, and submit your tax return by the 31st of January the following year. If you are a sole trader, running your own business as an individual and work for yourself, you are not a sole trader if your only business income is from a limited company or partnership. You can sign up if you get income from property in the UK or from property in another country. For example, letting houses, flats, or holiday homes on a short or long-term basis. The tax gap is the difference between taxes collected by HMRC and theoretical liability, or what should be collected. Making tax digital will exploit the opportunities offered by digitalisation to make it easier for everyone to get tax right. Better, quicker, and more accurate tax data with simpler, fairer penalties will help to close the tax gap. In 2022 to 2023 tax year, an estimated 4.8% of the theoretical tax due was not collected, which is around £39.8 billion. It's estimated that customer error and failure to take reasonable care accounted for 45% of this. These benefits have already been realised for VAT. 69% of VAT registered businesses felt that using compatible software has reduced the potential for mistakes, while 48% of Making Tax Digital for VAT businesses surveyed said that Making Tax Digital has made them feel more in control of their finances. It is currently predicted to deliver cumulative additional revenue of billions, in line with expectations set out at the start of the programme. This means Making Tax Digital has moved on to income tax with a confident track record and rationale for making these changes. But it is a big step change for income tax and poses different challenges to VAT. There's also a range of many other benefits which could be realised by using Making Tax Digital. Some of these will apply to everyone. Others will be opportunities that Making Tax Digital will create should you choose to use them. Others will be more specific to different sectors and circumstances. Some software packages will also help customers check if that the information they have submitted in their quarterly update is correct and identify any potential errors. Some of these features, depending on the software that you choose, will do this by using the information provided by the customer, as well as the information HMRC holds about them and their tax affairs. If so, customers can ask for a calculation of the amount of tax that they owe, request tailored feedback on their update, flagging possible errors, receive signposting to the relevant explanatory guidance on gov.uk, and be told about any tax reliefs and/or allowances they may be entitled to claim. This is tailored feedback and is designed to help customers have confidence in the information that they provide to HMRC and identify any errors earlier on, saving them time and avoiding the need to contact HMRC to correct them later. Updating records and making full use of software features such as helpful prompts where available, you can achieve a more real-time view of your tax record. It also allows you to spot any errors more quickly and regularly. This will ultimately mean that at the end of the tax year will become less congested, with actions and awareness spread more across the whole of the year. It will build from information in the quarterly updates and benefit from the increased also population of other information that HMRC already holds. For example, employment and pension PAYE information. Making Tax Digital for income tax will require sole traders and landlords to keep digital records. You must store all your records digitally and securely. This will reduce the risk of errors. You may be able to create digital records using your bank feed. You will be able to transfer data easily between systems. You can save time by not having to re-enter information, and it will help avoid losing paper receipts and invoices. We're working closely with software providers to help ensure that the software they're developing meets the needs of sole traders and landlords. Making Tax Digital is just one of many ways in which businesses can act as a catalyst for digitalization and transformation, including offering small businesses better access to accurate financial data, which enables faster and more informed decisions to drive growth and profitability, and leveraging digital tools. Small businesses can better forecast cash flow, manage budgets, and meet their tax obligations with greater ease. This approach reduces financial uncertainty. Digitalization of business finances can reduce the burden by automating routine tasks, such as invoicing and expense tracking, leading ultimately to more efficient and accurate tax processing. These systems free up time and resources for businesses to focus on strategic priorities and delivering value to their customers. The benefits will continue to grow and will be updated as the service is introduced, especially if agents and customers take the necessary steps to get ready early. So, get involved by joining early and signing up in time to start using the service. We have explained the benefits, we explained the context and benefits of Making Tax Digital for income tax. and the key requirements and enablers. We'll now cover who will be affected and when. And at this point, I'm going to hand back over to Michelle, who will take it from here. So back to you, Michelle.
Thank you, Kieran. So we'll also be looking at eligibility to sign up early and other factors such as exemptions. You need to use Making Tax Digital for income tax if all of the following apply. You're an individual registered for self-assessment, you get income from self-employment or property or both, and your qualifying income is more than the prescribed threshold. Your qualifying income is the total income that you get in a tax year from self-employment and property. We assess your gross income, also called your turnover, before you deduct expenses. To assess your qualifying income for a tax year, we will look at the tax return that you had to submit the year before. From the 6th of April 2026, self-employed individuals and landlords with income from self-employment and property that totals over £50,000 for the 2024 to 2025 tax year will have to keep digital records and send quarterly updates to HMRC using compatible software. From the 6th of April 2027, self-employed individuals and landlords with income from self-employment and property that totals over £30,000 for the 2025 to 2026 tax year will have to keep digital records and send quarterly updates to HMRC using compatible software. From the 6th of April 2028, self-employed individuals and landlords with income from self-employment and property that totals over £20,000 for the 2026 to 2027 tax year will have to keep digital records and send quarterly updates to HMRC using compatible software. There are several ways you can check if you are affected. Check information for the current tax year. Use the interactive tool on gov.uk. HMRC will send you a letter about this. As qualifying income is based on turnover, you may not have to wait until you've completed your tax returns for 2024 to 2025 to determine if you will be legally required to use Making Tax Digital for income tax. HMRC will assess your legal requirement for Making Tax Digital for income tax when you submit your 2024 to 2025 tax return. This is so that you can anticipate if you are likely to be legally required to use the service and take steps to prepare. Consider the information you have already, then decide whether you will be legally required to sign up. It is important for you to learn and understand these rules now. To help you determine when you may be affected, we've introduced an interactive tool on gov.uk. Check if you need to use Making Tax Digital for income tax. This tool will help you understand if you need to use Making Tax Digital for income tax and when you need to start meeting your new obligations. It will also set out the next steps that you should take in preparing for Making Tax Digital for income tax. We are writing to all customers who may be legally required to use Making Tax Digital for income tax from April 2026, based on their 2023 to 2024 tax returns. These letters will tell you if we think you will be required to use Making Tax Digital for income tax, give you more information about the changes, and tell you how you can get ready and involved. We will also write to formally notify customers who will be legally required and what you need to do. We recognise there may be some individuals who are unable to sign up for Making Tax Digital. This includes if it isn't practical for you to use software to keep digital records or submit them due to a disability, location, and age, people who don't have a UK national insurance number, practicing members of a religious society or order with beliefs that are incompatible with electronic communications. If a customer has been granted digital exemption from Making Tax Digital for VAT, or their turnover is below the threshold, they will automatically be exempt from Making Tax Digital for income tax. If you are exempt from Making Tax Digital, you must continue to submit tax returns as normal. We mentioned earlier the following key changes, which set out the legal requirements under Making Tax Digital and how these will be met. You must keep digital records, send quarterly updates, use Making Tax Digital for income tax compatible software to transfer digital records using digital links, submit your tax return using Making Tax Digital for income tax compatible software. We are introducing new penalties with the aim to simplify late submission and late payment penalties. If you have an agent, they must hold your authorization to act on their behalf in their agent services account. In order to use the Making Tax Digital service and meet the obligations we have set out, you must sign up to Making Tax Digital for income tax. We are introducing the ability for customers to allow multiple agents to act on their behalf. You need to ensure you fully understand these changes so that you can make informed decisions about changes that may be required for you to get ready to use Making Tax Digital for income tax. We will now look at each of these in turn, beginning with digital records. You need to create and keep digital records of your self-employment and property income and use Making Tax Digital for income tax compatible software to create the summary totals of income and expenses by category. Excuse me. Submit these as a quarterly update. Excuse me. At a minimum, the details in the digital record should consist of dates, amount, category. A digital record is created once the underlying financial information contained in the customer's business records is entered into the software or application. You only need to keep digital records of your self-employment and property income and expenses, such as self-employment income, including sales, takings, and fees, self-employment expenses, including the cost of stock, travel costs, office costs, and financial costs, property income, including rent, premiums for the grant of a lease, reverse premiums and inducements, property expenses, including rent, cost of repairs, maintenance, or other services. These relate to the boxes on the supplementary pages. If you have more than one business, you must keep separate records and make separate submissions for each business. For property income from multiple properties, treat all UK properties as one UK property business. Treat all non-UK properties as one foreign property business. If you own foreign property in more than one country, keep separate digital records for each country you get property income from. Digital records are a record of the date, amount, and category of income and expenses. Although this information is not required for quarterly updates, it may be helpful to have a transaction description. If you currently choose to keep a record of the disallowable portion, you should create a digital record of that amount. For example, you have a mobile phone bill which totals £200. The bill is made up of £125 for business calls, £75 for personal calls, which is the disallowable portion of the expense. If you choose to keep a record of the disallowable portion, you should create a digital record of the full £200 expense, the £75 disallowable portion. If you have a transaction which is part capital and part revenue, you can either record the full value of a transaction, including capital elements. You should make an adjustment before finalizing your business income, or create a digital record of just the revenue amount. For example, if you make a mortgage payment, you must create a digital record of the interest. You do not need to create a digital record of the capital you've paid. If you're sure you'll use a simplified expenses scheme, you do not need to keep digital records of your actual expenses. If you're not sure, you should keep digital records of all expenses. You can choose to categorize your digital records in less detail if you have either total UK property income of less than £90,000 before expenses, total income from self-employment of less than £90,000 before expenses. You can do this for one or both sources of income. If you're a sole trader, you only need to record whether a transaction is income or an expense. If you're a landlord and receive rental income from residential property, excluding furnished holiday lets, you need to categorize your expenses in more detail. You must record if a transaction is an income or an expense. Record whether expenses are for residential finance costs. If you are a retailer, you can choose to create a digital record of your daily gross takings instead of individual sales that you make. You need to ensure you fully understand what you will need to do to keep digital records based on what we have covered. This gives you a clearer idea of what you may adjust your record of how, I'll just repeat that. This gives you a clearer idea of how you may adjust your record keeping, and also in considering what software product best meets your needs. And at this point, I'm going to hand you back to Kieran to continue.
Thank you, Michelle. Let's now look at the requirement to submit quarterly updates. Quarterly updates are unadjusted summaries of the detailed income and expenses in digital records. These summaries are submitted each quarter to HMRC using Making Tax Digital compatible software. Every 3 months, compatible Making Tax Digital software will total the digital records and produce summaries, the quarterly update, for each income and expense category. You'll submit these to HMRC from software each quarter. The update must be sent for each trade and property business. So, if you had self-employed income as a plumber and income from letting out a property, you would be sending 2 updates each quarter. You do not need to make any accounting or tax adjustments before sending quarterly updates. After each 3-month period has ended, you need to send your update within 1 month. If you do not send it by this deadline, you may need to pay a late submission penalty. These penalties don't apply during the testing phase. The standard update periods are based on the tax year, and the deadlines from April 2026 are given in the following table, and I will just give you a moment to read over that. Moving on. Alternatively, you can choose to use calendar update periods which end on the last day of the month. This may make your record keeping simpler if your accounting period does not align with the tax year. You must select calendar update periods in your compatible software before the first update is made for the tax year. You will need to meet the same deadlines as the standard update periods. Consider how you will ensure your business records are available each quarter to create digital records and send each update. Let's now talk about software and how it is compatible with making tax digital. There are a wide range of products, and it's important that you understand your own needs and choose the right one. You must use HMRC approved software that works with making tax digital for income tax. This must be capable of creating, storing, and correcting digital records of your business income and expenses. Sending quarterly updates to HMRC. Receiving information, such as your tax estimates from HMRC, and submitting your end-of-year return to HMRC. You must have compatible software to submit quarterly updates, but you can choose to use non-compatible software to keep digital records. So you could keep digital records in a recognized Making Tax Digital for Income Tax compatible software package that stores the digital records and submits them the quarterly updates. Excuse me. Or you could use a software product or spreadsheet to create and store digital records that is not Making Tax Digital for Income Tax compatible and does not submit the quarterly updates. In these circumstances, the digital records must be transferred by digital link to a Making Tax Digital for Income Tax compatible software product to allow the submission of the quarterly update. In both circumstances, your compatible software will automatically collate the information from the digital records to send the quarterly update. Depending on your circumstances and needs, you may need one item of software which can meet all of the requirements, or you may need to link multiple software products together. For example, you might have one that you use to keep digital records and sending quarterly updates, and another for the end-of-year return. If you use bridging software or multiple software packages, once you've created a digital record in your spreadsheet or software product, the digital records can only be transferred using a digital link. This means that you must not manually edit or move the record within the spreadsheet or to other software if it has been included in a quarterly update. You can digitally link your records in various ways, including emailing a spreadsheet containing digital records so the information can be imported into another software product, transferring a set of digital records onto a portable device, for example, a pen drive, memory stick, or flash drive, and physically giving this to someone who imports the data into their software. XML, CSV importing and exporting, and downloading and uploading files. Let's look at some scenarios to demonstrate the use of multiple products and where digital links are required. In this example, the customer keeps digital records in compatible software and then uses that software to send the quarterly update. As there is only one software product, the digital records do not need to be transferred using digital links. In this example, the customer keeps digital records and then sends them to an agent to submit the quarterly update. The agent's compatible software needs the digital records to collate figures for the quarterly update, so they must be transferred by digital link. And in this example, the customer gives their business records to their agent. The agent then creates digital records and submits the quarterly update. There is no requirement for the business records to be transferred via digital link. To help you choose, some options include: if you already use a software product for self-assessment, ask your provider what their plans are for making tax digital and when any products will be available. Check with your provider that this software meets your needs, including which calendar period it supports. And check the Making Tax Digital Software Choices page, which is regularly updated with information about the compatible software. You must also file your self-assessment tax return using Making Tax Digital for income tax. Once you've told HMRC about all of your taxable income for the year, you can submit your tax return using Making Tax Digital compatible software. When you submit your tax return, you will declare that the information you provided is correct and complete, and you have finalized your income tax position for the tax year. We are introducing new, fairer penalties for income tax self-assessment. These will be more proportionate for customers, relating to the amount of tax owed and how long it takes to pay it. These new penalties for late submissions of annual returns and quarterly updates, and late payments of tax, aim to make these penalties fairer, more proportionate, and effective for customers. Penalties will apply to all customers who sign up early to Making Tax Digital for income tax, for late annual submission and late payment penalties only. Customers who sign up early are not subject to penalties for late submissions of quarterly updates until they are legally required to use Making Tax Digital for income tax. Penalties will apply to all customers as they become legally required to use Making Tax Digital for income tax. Penalties will be introduced for all income tax self-assessment customers later. New penalties for late submissions offer greater flexibility, only applying financial penalties where customers repeatedly miss their deadlines. New penalties for late payment will be more proportionate for customers, relating to the amount of tax owed and how long it takes to pay it. Late submission penalties work on a points-based system. Each time you miss a submission deadline, you will receive a penalty point until you reach the penalty point threshold, which will trigger a financial penalty. Each time you miss a deadline whilst at the threshold, you will receive another financial penalty. You can get back to a no point position by sending returns and updates on time and submitting anything that is overdue. Late payment penalties are a percentage of the amount of tax owed and are built around the idea that the sooner you pay, the lower the total penalty will be. Depending on how late you pay, you could receive 1 or 2 late payment penalties in relation to the length of time the tax is outstanding. If you're struggling to pay, agreeing a time to pay arrangements with HMRC stops late payment penalties increasing. We're now going to move on to what you need to do if you're using an agent for Making Tax Digital for income tax. If you will be using an agent for Making Tax Digital for income tax, they will need an agent services account, and for that agent services account to hold authorization to act on your behalf. It may be that there is no action required from you or your agent may contact you to request your authorization. A request for authorization from your agent can be through a digital handshake. You'll need to follow this process to complete the digital handshake. Your agent will send you an email with a link. You'll need to select the link and sign in with the Government Gateway user ID that you use for the tax service you need to authorize your agent for. The link will expire after 21 days. If you have not responded by then, you will need to ask your agent to send another link. You may be asked to verify your identity before you can give authorization to your agent. We are delivering a multiple agent solution that will allow customers to authorize multiple agents to act on their behalf. This will support customers who may instruct a bookkeeper to fulfill quarterly updates and an accountant to file their end-of-year return. There will be two categories of agents under multiple agent solution. One being the main agent, who will be able to act on their client's behalf across all Making Tax Digital for income tax services. The other will be the support agent, who will have restricted permissions and will only be able to undertake certain activities or functions on their client's behalf, including submission of quarterly updates. Here's an example of how multiple agents can help you meet the requirements of Making Tax Digital. In this example, the customer uses a bookkeeper as the supporting agent to manage their digital records and submit their quarterly updates. They give their business records to their bookkeeper. The bookkeeper then uses these to create digital records and submit the quarterly update. As the customer has a main agent who is carrying out the end-of-year actions and submitting the return, the secondary agent must transfer the digital records they have created to the main agent to support those end-of-year actions and submit the tax return. Ahead of the legal requirement to use Making Tax Digital for income tax, you need to consider the changes we have presented and plan for any changes you may need to make. Understand what digital record keeping and sending quarterly updates will mean for you. It may be simple data entry. Make changes, if required, to your current records keeping to enable easier digital record keeping and quarterly updates. This will simplify the digital record creation. Consider how the multiple agent solution may best serve your needs. And consider software products based on your specific needs. And at this point, I'm now going to hand back over to Michelle, who will take you through to the end of the webinar. So back to you, Michelle.
Thank you. As we have covered already, Making Tax Digital will require you to make changes, and we hope that this presentation is providing key information to inform those choices. You can further help yourself in making these decisions and even testing some of those changes by signing up early for Making Tax Digital for income tax. The best way to take early action and test any changes you will be implementing is to sign up early for Making Tax Digital for income tax before it becomes a legal requirement. It is important to remember that if you use an agent and want to sign up early, your agent must have an agent services account. The agent services account must hold authorization to act on your behalf. If these steps have not been carried out, sign-up will be unsuccessful. As we've mentioned previously, Making Tax Digital for income tax is a live service, and you can sign up voluntarily any time from now. There are various benefits to you signing up early. Each month, we are getting closer to when Making Tax Digital for income tax becomes a legal requirement. Signing up early means you get ahead of the game. You will be gradually introduced to new processes and software, helping you plan and transition and build your confidence with Making Tax Digital for Income Tax compatible software. You get the opportunity to help shape Making Tax Digital for Income Tax if you participate in testing. There are no penalties for the quarterly updates during the testing phase. You will have direct access to a dedicated customer support team who can also help with other income tax matters. You can sign up now if the following eligibility criteria is met. Your personal details are up to date with HMRC. You are a UK resident. You have a UK national insurance number. You have submitted at least one self-assessment tax return, or your agent has done this on your behalf. You are up to date with your tax records. Your accounting period aligns to the tax year. It must run from the 6th of April to the 5th of April, or from the 1st of April to the 31st of March if your software supports this. You must have access to Making Tax Digital for Income Tax compatible software. The full list can be found on gov.uk and by talking to your agent or software provider. You must be up to date with your self-assessment tax records and you must meet the eligibility criteria. If you are a self-employed business or landlord, check if you can voluntarily sign up by using our interactive tool. Use built-in eligibility checker that is carried out at the beginning of the sign-up journey, and use the built-in eligibility checker that is carried out at the beginning of the sign-up journey. This is the end of Making Tax Digital for Income Tax Readiness. Now for some closing reminders. Making Tax Digital for Income Tax becomes a legal requirement from April 2026, based on tax information for the 2024 to 2025 tax year. April 2026 is not very far away. If this applies to you, you'll need to get ready to start keeping digital records and submit quarterly updates from April 2026. This should make your end-of-year submission process easier. If you sign up early, you can gain working experience of using Making Tax Digital and test any changes you are making. So here is a summary of what we've covered today. We started with what Making Tax Digital for Income Tax is, including benefits and opportunities. We explained who will be affected and when. We looked at what is changing, the sort of digital records that you need to create and keep, and what we mean by quarterly updates. We've also looked at using Making Tax Digital for Income Tax compatible software, the new penalties, authorizing agents if you use an agent, including enabling the use of multiple agents. And finally, we went through the benefits of early sign-up. If you need more help, our full range of help and guidance can be viewed online from your mobile, tablet, or PC at any time. Links to further help and guidance are included in the handouts.